Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for March 19th, 2023. I hope you guys and gals are having a great weekend. Next week's going to be a huge week in the market. We have the FOMC, we have the Bank of England, we have inflation coming out of Canada, Mexico, South Africa, other countries. It's going to be a big week, but most importantly, there's a lot of banking concerns over the weekend with regional banks, with Credit Suisse. Is UBS going to take over Credit Suisse? Do they want to take on their book? They're going to piece it out. There's a lot to be discovered going into this weekend and this next week, and it's going to weigh heavily on central banks. So we've got a lot to talk about. A lot of technical areas we need to look at, and a lot of really great setups in the market. So make sure you don't go anywhere. But before we even get started, let me just say, if you haven't tried out Forex Analytics, try it. It's $1 for 10 days. One of the best ways to get involved in Forex Analytics is actually going to the Trader Funding Program. And the Trader Funding Program, the reason why this is so beneficial for you is because if you don't have the money, the capital to access, you can trade our money, or at least you can take an assessment to try to trade our money. We have $25,000 accounts all the way up to $1 million accounts. With these accounts, you get included with Forex Analytics for a certain period of time, depending on which account you try. The reason why this is so important, and I'm going to show you something. I got the blessing from Derek to show you this, but I want to show you our community. This is the Forex Analytics community. I mean, if you're trying to trade and you are trying to do things on your own, it is going to be a little bit more difficult. If you have a community of other traders to trade with, to talk charts with, to talk markets, that's what it's all about. I want to show you right here. If you go over to some of the discussions, I'm going to just kind of pull it down a little bit. Here we go. This is earlier on Friday. He said, "Thanks everybody for helping me pass the TFP evaluation. I really took a lot from everyone here, and it really made a difference knowing I wasn't trading alone." And now, Derek, his name's Jethro. His actual real name is Derek. I actually met him and his son in Scottsdale, Arizona, about 2016 or 2017. Then he left trading for several years, I believe, focused on family and his work. He's a pilot, and then he's back to trading, and he actually went through the Trader Funding Program. It's really exciting to see people like him that utilize the Trader Funding Program, and they utilize it for the community. I mean, we obviously have a lot of tools with Forex Analytics as well, analysis. We have our private shows that we do for the Forex Analytics community, but really being able to access our money and not risking your own money, because you keep 75% of the profits and you take none of the risk. You should be checking that out. Make sure you click on, there's a link down below. Make sure you check that out. All right, we're going to get into the markets right now. We're going to talk about, I'm going to get through the charts. Just, by the way, this is Forex Analytics. You get data flash, you got live squawk feeds, you have analysis and Elliott wave looks, harmonic looks, different looks of different currencies you want to look at. So, and we have 30 different instruments we cover, FYI. So there's a lot of tools in here. Risk management calculators, which is probably one of the most valuable tools for you guys and gals. All right. I'm going to go into the charts, and we're going to talk about, each individual. No, we're going to not talk about each individual instrument. I'm going to talk about a few of them. Obviously, I wasn't here last week. So the last time I've updated these charts was literally 2 weeks ago. So you're going to see some differences now, or some things have changed, and the lines haven't changed. So that's just something to keep in mind. We're gonna be doing a little bit of drawing here. So let's start with the dollar index, because the dollar's in a tricky spot. Remember, the dollar index is comprised of multiple currencies at different weightings. So the biggest weighting is going to be the euro. So what's happening in the euro is going to weigh heavily on what's happening with the dollar index. When you're dealing with the euro, and you just came off an ECB meeting where the ECB, surprisingly, I should say, to me, they raised interest rates by 0.5% or 50 basis points. That was I didn't think they were going to actually go through with that, especially with what's happening in Credit Suisse. But because the euro has held up very well, especially against different crosses, it weighted in the dollar index and kept the dollar index a little bit under pressure. But you'll notice looking at the dollar index, the 50 DMA is really, holding us up. It's really holding us up right now. And also, if you remember a couple of weeks ago, we talked about the dollar index flag pattern completing. Well, guess what? It completed. It finally completed. Because the last time I talked to you, we were right here and saying, it still there's some upside potential to finish that flag pattern. Well, it did complete. Now that it completed, we got a little bit of a reversal, but notice that we're holding above the 50 DMA and also the 50% retracement. That is going to be vitally important to the market this week as we head into the FOMC. That 50% retracement that you see right over there, it's going to be super important. So make sure you keep your eye on it, because a breakdown below that would probably signal that we had a dovish FOMC. The Fed didn't raise rates as aggressively as they were going to, a quarter percent, or even, they left rates unchanged, and, the dollar ends up getting crushed in that type of situation, which I think it's if you ask me right now, I think the Fed will continue to raise rates. They're going to raise at least 0.25%, at least. Now, the risk is obviously what happens with banks. If the banking sector continues to feel pressure as of early next week, we could see the Fed back off a little bit and just keep rates unchanged, but give us a hawkish no hike, if you will. If they no change in interest rates, but they say that they'll start raising rates again, especially getting past the banking sector issues. That is entirely possible. That the dollar would succumb to selling pressure in that situation, in my opinion. Like I mentioned a little bit earlier, the euro actually looks a little bit better because the ECB followed through with a 0.5% interest rate hike. That was a bit of a surprise to me, but the euro acted really well against different currencies. If you take a look at like the euro, let's just go to the euro Aussie really quick, and you can see currencies like that. They pulled back a little bit, but continue to be pretty strong. So you have to keep in mind that that the euro is actually looking better against a lot of different currencies as a result. Here's the euro sterling, still holding up well as well. So I want to actually continue on with some of these other pairs. Take a look at speaking of the sterling. The sterling had a hold and a false breakdown of support. We had this bearish wedge. We talked a lot about it 2 weeks ago. We broke below it. We got a false breakout. False breakdown leads to a breakout. That exact thing happened, and we're holding the breakout point in the sterling. I believe that the cable or the sterling is in a 120 to 122 range right now. So just keep that in mind. But we do have the Bank of England this week, and the Bank of England, a lot of people believe that the Bank of England might not even raise rates either. If that's the case, I would think that the pound comes under a lot of pressure. But do keep in mind we had this false breakdown here from 2 weeks ago, or a week and a half ago, excuse me. That's something just to also keep in the back of your mind as you get into this next week. One of the currencies that should really be on our radar is the US dollar Canadian. There's a couple reasons for it. First of all, the dollar Canadian broke out from a couple weeks ago. We had drawn this red arrow. You guys remember that? That breakout happened, and guess what else happened with this Canadian? Well, crude oil happened, and crude oil continues to sell off. Now, you got to keep that in mind going into this next week, because if crude oil continues to sell off and the Bank of Canada is dovish. Oh, you know what? I said that the BOC is not meeting this week. I'm sorry. It is Canadian CPI, which is good because it's really more of a binary type of situation, meaning if the data is weak, I think you can just buy the dollar CAD, as a result. Or since the FOMC is the following day, perhaps you look for, other Canadian pairs to trade. However, I want to talk about this price action here in the dollar Canadian, because the dollar Canadian has a Gartley pattern and it stopped where it should have. But a Gartley pattern can develop into what we call a butterfly pattern if that rally continues. And why is it at risk, in my opinion, for that rally to continue? Because there has been a very minimal pullback. So when you have a rally, as you see here, and then a minimal pullback like we've seen, it traps shorts and it doesn't allow traders to get long. So therefore, people have to chase the pair higher on a breakout. The risk is now tilted to an upside move. So weak Canadian data and an FOMC that follows through next week. If you have the FOMC that raises rates and says, you know what, I understand what's happening in the banking sector and I understand it's putting pressure on banks, but we still have inflationary problems. If the Fed comes out with that messaging and you have weak Canadian data, CPI, we will be trading probably above 141, 142 going into this next week. I know that's a bold statement, but the risks are there if those two things happen. All right, continuing on, speaking of other things that are happening this week, you guys might recall from a couple weeks ago, we were talking about the dollar Mexican peso finding support at the channel support. Well, a week and a half ago, I got long. Actually, it was 1 week ago. 1 week ago this Friday. Yeah. And I was in Las Vegas. I was there for my son's soccer tournament. Football, sorry, you European folks. And if you were in the chat room, you knew that I bought the dollar Mexican peso at the end Friday, late in the day. And I said, this banking issue is probably going to be a bigger issue moving forward. And we moved quite aggressively off of that. Once we broke back above 1850, you saw a huge move between 1850 to 1923. And that channel, remember, we had divergent relative strength. I don't know if you all remember that from a couple of weeks ago. We had divergent relative strength as we're hitting new lows. That suggests that we're probably nearing a bottom. We are at channel support, so now we got this reversal. My opinion is I really want to buy the Mexican peso. So what that really means is, and you guys know my longer term view, those of you that are longtime listeners of this show and of our F.A.C.E show that we broadcast every morning. If you don't know how to get there, it's right here. There's the F.A.C.E show. You can get to a link to it. There's also a link down below as well. But if you listen and you know me, I'm really more of a Mexican peso bull as I've been all of 2022. So basically what I'd love to do is I'd love to see a rally past the 200-day moving average up to about 1950, 1960, and I will start looking for dollar Mexican peso shorts. But next week, we do have inflation data, and that will be on Thursday, March 23rd. So just keep that in mind as we go into this next week. One of the other currencies I want to talk about, and don't worry, I've got other things to talk about, not just currencies. I'm going to talk about gold, and I'm going to talk about the S&P. But I'm going to talk about the US dollar, Japanese yen. I'm still short. I've actually played it on the short side. I covered it this week, and then I reshorted it, and I'm back to being short with a core short position. Guys, if you don't know what I'm doing in my trades, you can go right over here to the trades room, and you can see where myself and other members of the Forex analytics community put our trades, and you can see where my cost averages are, when I take profits, when I take losses, like I took a loss in this Aussie yen right here, and you can see what my position size is. You can go right to the trades room. I put them all right there. Anyway, one of the benefits of being part of the Forex analytics community, so you can have some idea of what you might want to be doing. You don't have to trade exactly what I do, but if you respect me as a trader, and I'm short dollar yen, and you're long, maybe you might say, Blake's short. Maybe I don't want to be long, or let me ask him why he's short, and that's what the community is there for. Anyway, I'm short the dollar yen. I'm short because of the BOJ, and the BOJ Kuroda is eventually leaving, and Ueda will be taking over in this next month. That's the real reason why I'm short dollar yen or long yen. But what you really should be looking at right now is this move in the bond market. We have seen this massive reversal in the bond market, and you're seeing yields come down. One of the strongest correlations right now is the dollar yen and 10-year yield. So, you know, and that's before this whole all the shenanigans are going to start with the new BOJ governor. So if the bond market, which you can see closed at the highs of the week, if we rally further in bonds, that means yields are coming down. And if yields can continue to come down and you continue to see a drop here, the dollar yen, which I'll put here, hang on, don't go anywhere. Here's the dollar yen. What you'll see is if bond at the 10-year starts to fall, you're going to see the dollar yen start to fall as well. And especially if we start breaking down in yields, you're going to see that dollar yen trade a lot lower, probably to the mid 120s. And yes, we are at 130, basically 132 right now. So lots to think about when you're trading the dollar yen. A couple other things I want to talk about. Look at gold. One of the big movers because of yields. If yields continue to go down and the yen continues to strengthen, that's just another correlation. Can gold hit new all-time highs? I was just talking to Jim Welsh of Macro Tides, and he believes, and he shows a Elliott wave count that shows us hitting new highs or could hit new highs in the gold market. Look, you just take this last move lower and 161% extension, that puts us at 2050. So if we get to 2050, do you think it's possible we make it all the way to 2072 to hit new highs in gold? I think it's entirely possible. Look at that relative strength. It may be overbought, but things become more overbought-ness. Airy. Or overbottery. Overboughtness. Very overbought. Yeah. So anyway, watch gold because gold looks like it could take off. Last but not least, let's take a look at the S&P. So the S&P has held a lot of key support, in my opinion, and stocks are holding up relatively well, considering. I'll give it that. But I think we're at a pretty big inflection point because we are sitting above that, previous broken channel. My opinion here is, if you look at here, that's not what I wanted to draw. Let me get rid of this since we haven't looked at it in a while. What I think at this moment, let's get rid of this fib, please. Okay. What I think is if we start breaking below previous lows, which happens to be right next to the 618 retracement, which comes in around 37.50. If this happens and you happen to be long risk, or you happen to be long asset classes that are going to participate or do better in a risk-on type of environment, you may want to think twice about that. So let me say that again. If we break 37.50, I don't think you want to be long risk. Good enough? Good. All right, guys and gals. If you like this video, make sure you give us a thumbs up, subscribe to the channel down below so you don't miss any of this exclusive content only found here on Forex Analytics. My name is Blake Morrow. I hope you have a great remainder of your weekend. I'll talk to you on Monday morning on the F.A.C.E show. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.